15 years ago, this committee held a hearing looking for solutions to protect members of the military and their families from abusive lenders that went out of their way to target service members. The then chair of the Banking, Housing, Urban Affairs Committee, Richard Shelby, described these practices as, quote, predatory lending schemes that target financially inexperienced consumers and make loans without regard to the consumer's ability to repay. Another member of this committee, Senator Martinez of Florida, described these high-interest loans as, quote, unconscionable. Senator Elizabeth Dole highlighted the efforts her home state of North Carolina had taken to shut down high-interest payday lending. Following that hearing, a bipartisan consensus emerged. Congress passed the Military Lending Act, which President Bush signed into law in 2006. That spurred action from both parties around the country. States of all sizes and all regions passed laws protecting consumers from high-interest predatory loans. Since 2010, Montana, South Dakota, Colorado, Nebraska, California, Illinois all passed laws to cap interest rates in consumer loans at 36%. And like the Military Lending Act, these state laws were passed with overwhelming bipartisan support. 72% of Montana voters, 75% of South Dakota voters, 77% of Colorado voters, 83% of Nebraska voters all supported ballot issues to cap interest rates at 36%. Of course, the payday lending lobby didn't give up. They spent every day since then trying to come up with new schemes to evade these laws, to exploit loopholes. They got an assist from the last administration. Fortunately, a bipartisan group of senators, including members from this committee, worked to overturn the administration's giveaway to the payday lobby, the so-called true lender rule. It would have allowed predatory lenders to evade state interest rates caps. We put a stop to that specific scheme. But again, the industry doesn't give up, not when their profits depend on tricking Americans out of their money. We need national protections. Now is the time for this committee to again lead the country by passing a federal law establishing a 36% interest rate cap on all consumer loans. That's why I and so many of our colleagues joined under the leadership of Senator Reid, who's chair of the Senate Armed Services Committee and the most senior member on this committee, to introduce the Veterans and Consumers Fair Credit Act. Senator Reid's legislation, our legislation, builds on the success of the MLA. It extends its 30% cap to everyone, including to veterans and surviving family members left out of the original law. This act is supported by more than 100 consumer, community, civil rights organizations, as well as military and veteran service organizations. This bill is also supported by a broad coalition of faith and organizations, including the Southern Baptist Ethics and Religious Liberty Commission, the National Association of Evangelicals, the National Baptist Convention, the U.S. Conference of Catholic Bishops. And like the MLA, it's bipartisan. Our bill's lead sponsor in the House, the two members who are here, Republican Glenn Grothman, welcome, and Democrat Chuy Garcia, welcome, are both here to testify before this committee. We know the tired arguments against the bill. They're the same ones we heard from the Military Lending Act. During the 2006 hearing, the payday industry claimed we would cut off access to credit to service members. That didn't happen. According to a May 21 Department of Defense report, the MLA is currently working as intended. We'll hear from Mrs. Petraeus about that. And service members continue to have ample access to necessary credit. We'll hear those talking points again today, I'm sure, because that's all the lobbyists on this have. It's an argument we welcome. We do want to cut off access to loans at high interest rates so high they ruin people's lives. That's kind of the whole point here. Payday lenders don't offer access to responsible credit that consumers can afford to pay. They offer the opposite, products that trap consumers in a cycle of debt. We've heard the same stories. Consumers end up renewing their loans over and over, paying more in fees than the original loan amount. We know that 75% of loans go to borrowers who take out 11 or more loans each year. Yesterday, I spoke with Ohioan Gloriella Vencia, a mother from Lorraine. She took out a payday loan to pay her bills. She ended up trapped in a cycle of debt. She paid $1,200 in interest on a loan that was $500 some. She shared the story of her daughter who took out a $200 car loan, ended up living in fear that her car would be repossessed. She'd been able to get to work to earn the money to pay off the loan. As she said, it's easy to get a loan. It's not so easy to get out of it. These Ohioans' experience sound a lot like the business model laid out in this actual training manual from Payday Lender Ace Cash Express. You can see the trap that people fall into. Another argument we hear is that no one can be profitable offering loans at 36%. Really? 36% is still pretty darn high and will make any company plenty of money. I asked my colleagues to think about their own credit cards or mortgages or loans they've taken out. I'm betting nobody on this panel has paid anything like 36% on any of those loans. Federal credit unions across the country offer payday alternative loans at rates between 18 and 28%. Some banks have begun to do the same. Even the American FinTech Council supports our bill. Their members offer short-term loans at rates appreciably under 36%. 15 years ago, Republicans on this committee described high-interest payday loans as predatory and unconscionable. If these loans are predatory and unconscionable when made to service members, as Senator Reid always points out, they're also predatory and unconscionable when made to anybody, to a veteran, to a surviving family member, or to a mother trying to get her car repaired so she can keep getting to work. Our committee took bipartisan action to protect service members. I'm optimistic we can do that together to protect all Americans we serve from debt traps.